Hello, everyone. Good morning to you. And how are you doing today? Um, let's confirm we're all on the same page. So if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section. Let's know that we're all on the same page. Okay, thank you, 959. Good morning to you. 359, good morning. Thank you for that confirmation. And good morning, 500. Oh, Carrie, thank you very much. Good morning. All right, 846 625. Good morning to you. Brujita 82, good morning. And 968, good morning to you as well. So let's get the session started. I want to take this as a confirmation that I can be heard and I can be seen clearly. And in that regard, oh, innocent babe, good morning to you. How are you doing today? All right, without further ado, let's kickstart the session. I want to welcome you all to yet another promising session on X Speed Live, hosted by myself, Sheriff Daramola. And as usual, I will be taking you on a trading journey in the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities that is lining up for us during the New York session today. So without further ado, let's dive into the chart and let's see what is happening. And I wouldn't forget, if you have any pairs or commodity or cryptocurrency that you want us to look at, feel free to drop it in the comment section and I will try to inculcate it into my plans for today. So we are going to be looking at the pairs we looked at yesterday. We are going to be looking at how well these pairs are doing and if there are any suggestions or any trading ideas that I will be sharing. So I will be advising you to stay tuned in through to the end of the session so that you don't miss out on any of these ideas or information that I will be sharing during the course of the session. So let's dive into the chart and let's see what is happening. So the first pair we are going to be looking at this morning is the US oil. And on the US oil, price action is moved as expected in the last 24 hours, as right now we are going to be in profit at this point in time. Okay, innocent babe, I see you. All right, I'm glad you are. All right, so this is what we have here on the US oil, and price action has actually moved right in our favor in about how many pips that is. It's over around 300 pips thereabout, which is not bad at the moment. So what I'll be advising us to do at this point in time is to move our stop loss to protect our position against any sudden pullback that might be happening at this point. So what was our expectations yesterday? Well, we had a channel that we identified as we saw our price action has been caught within a consolidation phase right within the $93 level and the $91.50 area. And I was saying that if price, we are going to be patient to see if price is going to give us a signal, and the signal is likely going to come in the form of a breakout of the channel to the upside, or we could be seeing a breakdown to the downside here. And lo and behold, that's exactly what happened as we saw the scenario as price continued to the downside from that area. So right now things is moving according to our expectations. So if you are taking advantage of that move yesterday, kudos to you for being on standby to take advantage of that move. And for those who did not take advantage of that move, then what are we going to be looking at for today? Well, the first thing I want to do here is to scale up to the higher time frame, where we want to be looking at how we got to this point in the market. What was our perspective in the initial state? What did we see on the higher time frame, and how did we get to making the decision of selling the US oil? So let's scale up to the daily time frame. And what do we have on the daily time frame? Well, on the daily time frame, it's a very simple structure we have here. as we can see, we have this this bullish trend line after connecting the series of higher lows here. So we were able to connect the series of higher lows here to give us that resultant bullish trend line. And then when we zoom into what has been happening since the month of June, we can see that price has been caught within a downtrend scenario as price action continue to find lower lows and lower highs, hereby collapsing right back into that bullish trend line that we identified earlier. So since the month of September, we noticed that price has consistently respected that bullish trend line, not until the later part of the month of September, where we witnessed the breakdown of that bullish trend line to give us a signal that there is going to be a bearish momentum. However, attempts by the sellers to push price to the downside after the retest of that bullish trend line was met with bullish potentials as price continued to climb right above that bullish trend line to send the bullish signal. So what this simply means is that the breakdown of that bullish trend line will hereby be called a false one, as the bearish momentum never held. So in addition to this structure here, I was able to identify the $86 level, which is more or less a major significant factor in determining price action, at least in the last 3 months. And if we zoom into what has been happening since the beginning of the month of August, we saw how this level has been a major buying niche for participants in this market. So we saw here in the month of August as well. And then if we fast forward into the early days of the month of September, we saw buying potential here, though the momentum wasn't as strong, as we saw our price broke back down that structure, did a retest of that structure a couple of times before we saw another breakout of this key level during the last week trading session to incite that bullish momentum. So from a technical standpoint, if we look at the breakout of that structure here, that is the scenario we saw here during the course of last week trading session, we saw that price climbed right back above that bullish trend line. That is the first one. Then the second one was the break above of the key level at the $86 level, and then the third one is the breakout of that bearish trend line, giving us a clue that this is more or less a bullish, that the buyers are very, very strong at this point in the market. And from a technical standpoint, whenever we cite a breakout or structure like this, we expect that price is going to come back and do a retest of the structure. It could be either the key level at the $86 area, or probably the bearish trend line that was broken during the course of last week's trading session, or probably the bullish trend line that we have here, after which we look out for patterns on lower time frame that will be supporting a trend continuation to the upside. And lo and behold, if we look at what has been happening since the beginning of the week, we can see that price closed at the $93 level last week, and since price closed there, we begin to see bearish momentum from that area. And one thing I will say here is this: I want to be seeing this bearish momentum as a possible retracement of this impulse leg. So we have this impulse leg running, and then since price tested the $93 level, we are beginning to see traces of selling momentum, and this is likely going to be quick sells from those who took advantage of this bullish momentum. So they want to do some profit taking. So while taking some profit, we are going to be seeing some retracement, as we have been witnessing since the beginning of the week. So right now, we don't know where this move is going to end. Is it going to end at the key level here, after which we look out for patterns on the lower time frame to support a trend continuation to the upside? Or are we going to be having a situation where this retracement phase is going to come back into the structure that was broken last week around here? So we had a structure broken here last week. So there is a likelihood that price might come back into the structure. And if you look at the structure here, you can see it shares a confluence with that bullish trend line as well. And it's not too far away from the key level that we identified around the $86 level. So in as much as we don't know yet where price action will be going, we'll continue to monitor price action and move our take profit target, extend our take profit target accordingly as price action moves in our direction. So right now, let's see what is really happening in the market and how we intend to be trading the US oil for today. And this is going to be for those who are not part of the session yesterday and you are looking to take advantage of the trend of the retracement move, or probably you want to add more position to your existing trade. So in order to do that, we will need to scale down to a much lower time frame, and what we're going to be doing here is to scale down to the 1 hour time frame. And on the 1 hour time frame here, what we observed during the early hours of yesterday was that since price tested the $93 level, we began to see bearish momentum. As you can see, the first candle that started this week was more or less a very strong bearish engulfing candle. We saw our price rejected the $93 level at the first touch of this week. We saw price come back down into the $91.50 area. We saw multiple rejection of that area where attempts by the buyers to push price right to the upside was met with stiff resistance as price couldn't reach or break out of the previous structure. And since then, we started seeing consolidation phase around this area. So we identified the channel between the $93.50 level and the $91.50 area. And so we were looking for a breakout or breakdown of the structure to give us that signal of where price might be heading towards this week. So right now, since we already have this bearish move, price has broken down the $91.50 area, and the bearish momentum appears to be very strong at this point. Now, what we want to be doing now is to look out for a possible second chance for those who missed out on this opportunity. So what I'll be saying here is this: if we look at what happened during the early hours of today, we can see here that we had a consolidation phase right around the $91 area here. So we saw a consolidation phase here before the breakdown of that structure. So what I'll be doing here is to identify that structure. Let's see what happened here, and then let's see if we're going to be having a retracement back into the structure, after which multiple rejection might be inciting a trend continuation to the downside and probably give a second chance for those who missed out on the trade we took yesterday. So what I'll be doing here is to bring out my line chart so that we can have a specific point of connection. So we have our line chart here. So we will be using this area that is somewhere around the $90, I think $90.60 will be most appropriate at this point. So let me give this a blue color. So okay, so we have, let's label it the $90.60 level. So we have the $90.60 level here. I'll rather use my small letters. Okay, we have the $96.50 level, and then okay, good. So we have that level right there, and then we also have a bearish trend line that we could work with for this week. So we have something like this. We have a structure right around here, which okay, so let me give this a dotted dash line, and then so we have something like this. Sorry. So this is what we have at this point in time. There's a structure we are going to be working with as we head into the New York session today. I want to adjust this so it's around $90.50 area. So let's relabel this. So we have the $90.50 area. So let's see if the market is going to give us a second chance, and the second chance is likely going to come in the form of either a retest of the $90.50 level, or probably the trend line we identified here, after which we sight a reversal pattern along this trend line. Then we could be joining the trend continuation to the downside. So that is the scenario I'm looking forward to at this point. So if price gives us that second chance, we want to be taking advantage of that move, and if it doesn't, then well, we'll look to fight another day. Now, where is our take profit target? Our take profit target still remains right at the key level, which we identified at $86 mark. Remember, we identified this key level on the daily time frame. Let me show you so that you can have a better understanding what I was talking about here on the daily time frame. Remember, I showed you this $86 level, which has been a major determinant of price action since the month of August. So we are going to be looking at how price is going to be relating to this level. So our TP target still remains somewhere around that area at this point in time. So let's see what happens afterwards. Is price going to get back into the key level here, or are we going to be seeing a breakdown of that structure, retest to send price going to the downside? So if we get to that point, we want to see how price will relate to that level, if there's going to be an opportunity to add more position to our existing trade or not. So right now our TP target still remains at the $86 level, which is dovetailing to over 550 pips to catch here. So let's see how price action plays out in the next 24 hours on this one. And if you have any questions or you need further clarification in one aspect in whatever I've just discussed so far, feel free to drop in your inquiries in the comment section. So on the next 10 to 15 seconds, I will be looking through the chat to see if there are any questions regarding what I have just discussed so far. And if there are none, we'll move on to the next pair. So let's see what's going on in the chat. All right, Coronel, okay, how are you? 7083, good morning. 554, good morning to you. 871, good morning. All right. Okay. So if you still have questions along the line, you feel free to drop it in the inquiries in the comment section. Let's move on to the next pair. So the next pair we are going to be looking at is the US tech. At least most of our pairs that we took since the beginning of the week has been very profitable for us, and likewise the US tech too as well, as we saw a breakdown of that structure during the course of yesterday. So what do we have here on the US tech? What was our expectations and where were we as at the time we did the live session yesterday? Well, we were around here during the live session yesterday where we were close to around the $11,050 level. And then one thing we observed here as since the beginning of the week was that price was caught within a consolidation phase between the $11,050 area and the $10,950 level. And one thing we said here was that we will be looking forward to a signal which is likely going to come in the form of a breakout or a breakdown of the structure. So we had a breakout of that structure yesterday and price did the retracement back, but it was unable to find reversal patterns that will push price to the upside. So that perspective was negated. But during the New York session yesterday, I think it was towards the mid session of the New York session yesterday, we cited this breakdown of this channel at the $10,950 level, and then price came back to do a retest of structure, after which we saw an opportunity to join the decline to the downside. And currently price is about how many pips there is. We have since the breakdown of that structure, so we have about 127 pips thereabout. So if you are taking advantage of that move yesterday, kudos to you for being on standby to take advantage of that move. So this is what we have right now. So what we want to be doing at this point is to lock in some profit. So like I said, what we want to be doing at this point in the market is to lock in some profit here. So we want to be moving our stop loss probably somewhere around the $10,900 area to protect our position against any unexpected pullback that might likely happen from this point. So going into the New York session today, the first thing we want to be doing is to see what our plans is going to be like. That is, are we still going to have another opportunity to add more position to this existing trade? And the second one is to see if there is an opportunity for those who missed out on this trade yesterday. So let's scale up to the higher time frame. Let's see where we started the week. What was our expectation? What did we see? And what made culminated in the informed decision we made yesterday? So looking at the structure we have here on the daily time frame, we have a very strong bearish momentum as price has consistently found lower lows and lower highs. And as a result of this, I was able to identify this bearish trend line after connecting the series of lower highs here to give us that parameter that we will be using to guide our actions going forward. However, if you zoom closely into the structure here and look at what has been happening since the month of June, we can see all bearish momentum was met with stiff resistance from the buyers around this $11,000 level. And as soon as price comes into the $11,000 area, we started seeing bullish momentum from that area. It happened also in the month of July. We saw that bullish momentum, and since price tested the $13,700 area in the month of August, we started seeing consolidation phase, and price continued to find lower lows and lower highs. And what happened afterwards was that price came back into that demand zone that it was in the month of June. And in the month of September here, we started seeing multiple rejection of this area, giving us a clue that we might be having buying potential opportunity from this area. Remember, we took advantage of this bullish potential last week, and then price came back right back down into that demand zone. So it's more or less an ambiguous situation we have here, as price continues to oscillate right within the demand zone that we have identified here. And as long as price continues to stay within that demand zone, we want to be looking forward for buying opportunity, looking at that from a technical standpoint. So we want to be looking forward to buying opportunity around this area that will be pushing price to the upside. However, if we have a breakdown of the demand zone here, that will be seen as a bearish signal, and then we want to be looking forward to taking advantage of that bearish continuation at a retest of structure on our lower time frame. Then we will be joining the decline to the downside. So because of this information we had here on the daily time frame, we had to scale down to the 1 hour time frame to see how participants in this market are actually relating to the structure within the demand zone here. So when we scaled down to the 1 hour time frame yesterday, the first thing we observed was that price has been within a consolidation phase right within the demand zone. So it's more like an indecision has gripped the market around this area, which is also within the demand zone. So we really need to be very, very careful, as the possibility of a bullish momentum is still very valid at this point. So now that we had the scenario, we took advantage of this bearish move to the downside. Price is running with about 120 pips thereabout, and we've moved our stop loss to break even at this point. And what we saw here in the last let me see, in the last 12 to 18 hours now, we've been witnessing the multiple rejection of the $10,850 level. So we saw that as soon as price comes into this area, we saw bullish potential. We saw bullish potential here in the last 4 hours as well. And then we need to be mindful of how we go ahead on this trade. So what we want to do here, hold on a second. I want to identify this rejection. Remember, we have a structure. Look at what happened here 2 weeks ago. We have at the beginning of the week, we saw at the beginning of the month, we saw rejection here, we saw rejection here, and in the last 4 hours we've been witnessing rejection around that area. So what does it tell us? It tells us that we have there's tendencies of buyers coming into this market at this point. So what we want to be doing here is to identify that zone, and that is the purple line we have here. So we have the zone identified here. Hold on a second. So we have the $10,850 level. So this level is going to be a major yardstick for us as we head into the New York session today. So with the key level, with another key level identified, the $10,850 area, we want to see a significant breakdown. That is an engulfing candle taking us right below the $10,850 level. That is all the buy position here has been taken out. So if we cite that bearish signal, remember, we are not getting too excited at the sight of such a signal. We want to be patient enough to wait for price action to give us further confirmation, which is likely going to come in the form of a retest of the structure. So if a retest of the structure happens and we see something like multiple rejection of that area, or probably a reversal pattern on our lower time frame, then we want to be joining the decline to the downside. So for those who had missed out on the opportunity that we took here yesterday, we also have another chance here that says, remember, it is after the breakdown happens. So if we cite a breakdown of the structure, we want to be patient enough to wait for price to come back into that structure, after which we look out for patterns on lower time frame that will be supporting a trend continuation to the downside. So if you had missed out on the trade yesterday, we hope that the market is going to give us a second chance to join the decline at that point. And if you're already in this trade, a breakdown retest of the structure will be welcoming us to add more position to our existing trade. So that's the first scenario we are looking forward to on the US tech for today. Then the second scenario we are going to be looking at is the possible scenario where this $10,850 level finally becomes a temporary buying niche. So will this turn out to be a temporary buying niche? Remember, we've been seeing multiple rejection by the buyers here in the last 18 hours. So we want to see, we don't want to negate the possibility that buyers might likely come in to this market at this point in time. Remember, for those who are already in this trade, we've already moved our stop loss to protect our position here. So such in a situation where buyers finally comes into this market, we are already safe. Our position is secured. Now, if price continue to reject this level during the New York session today, we continue to see multiple rejection of this level in such a way that we cite a breakout of structure, retest to structure. The tendency of a bullish momentum is still very valid here. So one thing I will advise at this point is that if we start seeing a consolidation phase around this area, we want to identify that consolidation phase by drawing a support and resistance around that area. Then we look out for a breakout of structure. So for the sake of clarity, let me just simulate a scenario here. So if we have something like this, like a consolidation phase here, and we have our resistance point around this level during the New York session, and we cite a breakout of that structure, and we'll wait for price to give us further confirmation in the form of a retest of that resistance point in such a way that we look out for reversal patterns on lower time frame to join the rally to the upside. Remember, we are within a demand zone here, so it's more or less advisable, if we cite a breakout retest of that structure, to buy the US tech at this point. So that is if this happens. But if that does not happen and we cite a breakdown of the $10,850 level, a retest of structure should be giving us an opportunity to add more position to this trade if you're already in this trade, and for those who are not in this trade, it will be giving us another opportunity to join the decline to the downside. So that is the scenario we are looking at on the US tech. If you have any questions whatsoever, feel free to drop in your inquiries in the comment section, and I am here and willing to be of help. So let's see what is happening in the comment section. If there are any questions, if there are none, then we'll move on to the next pair. So we have 292, peace unto you. Sure, peace be unto you too. We have 930, good morning. Vera Mami, I hope I pronounced that correctly. Good morning to you. 914, good morning. Doc, good morning. All right, so in the absence of no questions, I guess we'll just have to move on to the next pair. So what's the next pair we treated yesterday? Let me see. Okay, the next pair we treated yesterday was the gold. The gold, that is XAUUSD, and on the gold too, we are in a very profitable scenario on the gold as well. So look at the situation we had here yesterday. We were around here during the live session yesterday. I think we were around this area during the live session yesterday, and remember I told you that the week started on a bearish momentum. The week started at around the $1,700 level, and I told you that I missed this bearish move. I missed this move. I woke up very late, and when I came to the chart, this move had already happened, and we saw that price was around the major key level we identified on the daily time frame. I will be sharing that with you in a moment, but let's quickly run through the replay of what our expectations were before we move on to the higher time frame. So we had the scenario here, and I said if we have a breakdown retest of the structure, we want to be joining a decline to the downside. In fact, we had multiple rejection. We had 1, 2 rejection of that level on our lower time frame, and price moved in our direction. And right now price is running with about how many pips in profit right now? So we have about 8,800 pips in profit. If you are taking advantage of this move yesterday, kudos to you for being on standby to take advantage of that move. So the next thing we want to be doing at this point is to protect our position against any sudden pullback that is likely going to happen. We might be having a situation where price might come back into the key level that we identified on the daily time frame before another phase of bearish momentum began. So what we want to do here is to lock in our profits somewhere around the $1,672 level. Right above that level looks most appropriate at this point to lock in some profit, just in case anything unexpected happens. So that is the scenario we have here on the XAUUSD. So kudos to you for being on standby to take advantage of that opportunity. Now, scaling up to the daily time frame, what was the view we had from an holistic standpoint? So in the situation we have on the daily time frame is quite very obvious. We have a very strong bearish momentum, and as a result of this, we connected the series of lower highs here to give us that resultant bearish trend line we have here on the daily time frame. And what we saw during the course of last week trading session was that price has continued to respect that bearish trend line, hereby pushing price to the downside. So going into the new week, the first thing in our mind is to be looking for bearish opportunity, as we expect that price might likely continue to respect that bearish momentum that it began the week began the year with. So we have the scenario. So let's see if price is going to continue to the downside from here. So in addition to the structure we have here on the daily time frame, we have the $1,680 level, which is serving as our key level. In fact, this level has served as our key level for the past 1 month now. And look at what happened here. We can see in the month of July how this level has been a major determinant for buying power. We also saw that in the early days of the month of September, where buyers came here, gathered here to buy the gold. However, during the mid-month of September, we saw the breakdown retest of this key level to push price to the downside. However, during the early days of this month, a breakout of that key level signaled a possible bullish momentum. But what we saw during the course of yesterday's trading session was a very strong bearish candle that took price right below the key level here, giving us a clue that the selling momentum here, the strength of the sellers at this point, is very strong. So in that regard, what we want to be looking forward to is a continued selling opportunity here on the XAUUSD. But before I scale down to the lower time frame, I want us to quickly look at something here which we won't want to ignore. Now look at this bullish this impulsive move to the upside here. How are we going to ignore this bullish impulsive leg? So we can't ignore this impulsive move to the upside, so we need to take into consideration of this impulse leg. So there is a likelihood that this move could be a retracement of that impulse leg in such a way that we could be having a reversal pattern around here to push price to the upside. That's something we also want to take note of. So if we bring out our Fibonacci retracement tool here, and let's see where out between the 618 and the 786 area, so we have somewhere around here. So what this simply means is that in the meantime, our selling momentum, the sell position we have here, we should be having our take profit target for sell position around this area, because we never can tell. We could be sighting any reversal pattern from this area anytime. Market is very unpredictable, so we need to prepare ourselves to be able to react accordingly when price starts giving us such signal. So we have let's have it right side it. So we have the TP target for sell position within this area. So let me extend my TP target a little bit into the maximum point here at around the $1,640 area, which will be dovetailing to about 4,100 pips. So we have something like that. So let's have our TP target for sell position here, and if anything like a reversal pattern happens within this area, that we start seeing multiple rejection of this level, then our antenna should be on alert that there is a possible situation where price might break out of structure and continue to the upside from this area. So we want to be on standby in case anything of such happens around this area. So now let's scale down to the 1 hour time frame, and let's see if the market might likely give us a second chance of the sell position that we have taken advantage of. So we will be going down to, okay, before we go down to the 1 hour time frame, on the 4 hours time frame, we noticed something on the 4 hours time frame. we had a reversal pattern right around that bearish trend line, which we identified yesterday, and this is more or less one of the bases for the selling momentum that we were looking forward to for this week. So we saw this double top structure here. Price respected that area. We saw the first touch here. Price came back into the neckline at a $1,705 level. Price was unable to break the previous high here, evolving into a reversal pattern, broke out of the neckline here, and since then price has continued to trend on the lower side. So is there a possibility that we could be having price come back to do a retest of this neckline, where a trend continuation to the downside might likely happen? So that is one thing we don't know, and we don't know if this area we identified on the daily time frame, that is the golden zone area between the 618 and the 786 area, will be transposing into a reversal pattern here to send price right back into the neckline here, which also shares a confluence with the bearish trend line, after which we look out forward to an opportunity to join a long-term trend continuation to the downside. So these are the scenarios we are going to be looking forward to, but at this point in time we'll just have to be patient, move our stop loss to lock in some profit on this one, and let's see what happens afterwards. So scaling down to the 1 hour time frame here, what do we have on the 1 hour time frame? Okay, so we have something like this on the 1 hour time frame, and if we look at what has been happening since the early hours of today, we can see that this level has continued to be rejected by the buyers. So we also need to take into consideration what is happening around that area. So we can't ignore the fact that we've been witnessing multiple rejection of the 1,600 and let me call it $661 level. So we will have to label this for the sake of clarity. So we have the $1,661.50 area here. So let's place it on the right hand side of our screen. So we have something like this, and we never can tell what could happen during the New York session. So we had this impulsive move since yesterday. Price continued to reject this level. So we saw multiple rejection of this area. Price might likely come back into the structure to give us another opportunity to join the decline to the downside. So these are one of the scenarios we want to be looking forward to at the New York session. However, if at any point in time during the New York session today we cite a breakdown of the $1,661 level, then we don't want to get too excited. Remember, we want to wait for confirmations to happen. That is a retest of the structure. Then you can add more position to your existing trade. And if you are the one that have missed the opportunity we took yesterday, then this could be another opportunity to join that decline. So we have the $1,661.50 level as our yardstick for the trading session today. So we have this. So if we have a breakdown of the structure, a retest of that structure should be giving us a confirmation to add more position to our existing trade. However, if that structure holds for buying niche, that is buyers win the tussle here and price goes to the upside, then we want to be patient enough to wait for price to come within the $1,680 area. It could be around here, it could be around here, but the most important thing we want to be looking forward to is a reversal pattern that will be giving us that confirmation to join the decline to the downside on the XAUUSD. So this is what we are going to be looking forward to for today. If you have questions, feel free to drop in your inquiries in the comment section, and let's see how I can be of help. So moving on, we are going to be talking about the GBPUSD, and on the GBPUSD too, the situation we have also looks more favorable, though price is right back at our entry zone. So during the course of yesterday, we were around here. During the course of the live session yesterday, I think we were around at this point yesterday, we were around here yesterday, around the 1.107500 area as at yesterday. And one thing we observed during the early hours of the week was that price has been within that consolidation phase between the 1.11100 level and the 1.10500 level. And one thing we said is that we are going to be looking forward to a signal in the form of either a breakout of the structure to the upside or a breakdown of that structure. And lo and behold, what happened afterwards during the New York session yesterday was a breakdown of the 1.10 500 area, giving us that signal that we have been waiting for, and price came back to do a retest to structure. Then we joined the decline here. Price though came back, and then price continued to the downside at this point. So price moved about how many pips that is? About 70 pips there about before we saw this situation here where price came back to our entry zone. Well, if you are one that had moved your stop loss to break even at that point when you saw price move into the 1.100 level, well, you must have been stopped out by now. But if you don't have any if you have not moved your stop loss whatsoever, well, you will still be in profit at this point in time. And let's see how price is going to move from here. So one thing I'll be doing here is to remain my stop loss right above the 1.1100 level, and let's see how the event unfolds in the next 24 hours. However, if you are not in the trade yesterday, well, I will be suggesting that anywhere right below the 1.10500 area looks more promising to be selling the GBPUSD, and our take profit target still remain right around the neckline area of the 1.0900 area, which falls within the buy zone that we have here. So I will be sharing this with you in a moment. So let's go to the daily time frame and let's see what the structure is looking like on the daily time frame. So on the daily time frame, if we look at the current structure we have here, price has been on a very strong bearish momentum, and this is evident after drawing the bearish trend line that we have here. And since the month of August, price has been trading right below the 1.1800 level. So we saw the breakdown of the 1.800 level in the month of August, and price has continued to trend to the downside. However, something interesting happened a couple of weeks ago. We saw the breakdown of the 1.1400 level, which is around this area. Hold on a second, let me show you. So we saw the breakdown of the 1.1400 level here, and during the course of last week's trading session, we saw price come back to do a retest of that structure. And what does that tell us? It tells us that the sellers are still very strong at the juncture and the market. And since then, we started seeing bearish engulfing candle that took price right into where we are at this point in the market. So right now, what's going to be the scenario we are going to be looking forward to? Are we going to see a situation where we see a little retracement back into the upside before the trend continuation to the downside happens? That is one scenario we want to be looking out for, and well, we will be getting that on the lower time frame. So here, this is what we have here. And when we scale down to the 4 hours time frame, I showed you a reversal pattern here on the 4 hours time frame. Look at what we have here on the 4 hours time frame here. Since the breakdown of the 1.14 level, we saw this move to the downside, and price action evolved into a reversal pattern. We saw a higher low. Then we witnessed a breakout of the neckline at the 1.0900 level as price climbed right back into the structure that was broken a couple of weeks ago. So we saw price come back into that structure here, and then we started seeing something like a retracement move back into the neckline area. So price is still moving downwards. So I'm saying this as a retracement move. So that's the reason why we have our take profit target somewhere around the buy zone here, which lines up with the neckline of the 1.0900 level. And the reason why we have our take profit target around the neckline area is simply because when we look at this from a technical standpoint, whenever we have a breakout of a neckline, of a reversal pattern like this of the neckline structure, we expect that price is likely going to come back, do a retest of the neckline area before we start seeing a trend continuation to the upside. So that is why we have in our take profit target around the neckline area at this point. So now, since the beginning of the week, price has been caught within the 1.1100 level and the 1.10500 area. So the bearish momentum still looks very valid here. So like I said, if you are not yet in this trade, somewhere below the 1.10500 area is looking very, very good to join the decline to the downside. That is the first scenario. Then the second scenario is this. So remember, we have this 1.1100 level, which is the highest point price has ever gotten this week. So if at any point in time we get taken out of our sell position here and price breaks above the 1.11100 level, then we want to be seeing this as a bullish signal, after which a retest of that channel or that structure will give us confirmation on lower time frame to join the rally to the upside. But in as much as if that happens, that a breakout retest of that structure happens, I still want to see that as a retracement move of this impulsive leg that started last week. So we want to be looking at our golden zone area as our take profit target if you are taking a counter trend trade. But for me, I will be waiting for price to come within the golden zone area to look for selling opportunities. So what we're going to be doing here is to look within the 50 and the 78.6% area, which also lines up with the 1.14 level, which was broken a couple of weeks ago and tested last week. So we could be looking forward to sell window around that area. So we should, let me label that area for the sake of clarity. So we have the sell window right within this point. So we have somewhere between the 1.12500 level and the 1.1400 area for a selling momentum. That is if price breaks out of this channel that we identified here. So that is what we are going to be looking forward to. So like I said, selling below the 1.10500 area is very reasonable. However, if we get taken out of our position in such a way that we have an engulfing candle break out of the 1.1100 level and price close right above that structure and gives us a retest of structure, then we want to be seeing this as a retracement move back into the sell window here, where we want to be joining a sell momentum at the site of a reversal pattern. And if you are a counter trend trader and a breakout of the 1.110 happens, retest, then you might want to join the rally with a take profit target falling right within the sell window here. And let me see how many pips that's going to be giving. A minimum of 130 pips and a maximum of about 300 pips thereabout. So let's see how price action plays out on the GBPUSD in the next 24 hours, and definitely we'll be coming back here tomorrow to do a follow-up detail to this analysis here. So that is that on the GBPUSD. Then we move on to, okay, Innocent Babe, thanks for that compliment. I appreciate, and I'm glad you are tuning into my explanation. That is a very good sign. And let me see. 427, teach me how to make money here. Well, that's what we're doing already. We are planning against the New York session. We want to get ourselves prepared for the New York session. So stay tuned in, continue to join us, and with time you get to understand how things work here. So the next pair we are going to be looking at is the silver, that is the XAGUSD, which is also in a profitable position as at the time I started the live session. So we have a scenario here on the XAGUSD, that is the silver, as price has continued to move in our direction as expected. So where were we yesterday? We were around here yesterday, I guess. Okay, we were around this point yesterday, around the $19 level. That was where we were yesterday. And the first thing we observed within this area on the 1 hour time frame was that price action has been caught within a channel since the beginning of the week. Sorry, no. Okay, price started the week at around the $20 level, which was around here. And I told you I missed this move yesterday. I missed this move to this area. I woke up late, like I said earlier, and when I checked my chart, I saw that price has actually moved significantly well in the direction that I was projecting. But it's okay, the market gave us a second chance again, and then we saw the scenario. We were around here. As soon as price got into the $19.70 area, we started seeing consolidation phase. We started seeing buying attempt from participants in this market to push price to the upside, but that did not happen. We saw a little breakout of that structure, but price continued to the downside here, and we witnessed this bearish signal here during the New York session yesterday to give us that signal that we are looking forward to. So the breakdown of the $19.70 area was the bearish signal that we were waiting for, and what happened afterwards was quite interesting. So we saw multiple rejection of this level. So if you had missed this, we had multiple rejection that lasted about 10 hours thereabout. So if you had missed the first one, you will have taken the second, third, fourth, fifth. We had multiple rejection of that level before we started seeing that bearish move to the downside. And currently price is running with about, let me see how many pips that is, with about 370 pips, 360, 370 pips thereabout. So if you are taking advantage of this move yesterday, kudos to you for being on standby to take advantage of that move, and well done for doing that. So what we want to be doing next right now is to move our stop loss to protect our position against any sudden pullback that is likely going to be happening at this point in time. So where do we want to place our stop loss at this point? We want to be placing our stop loss somewhere right above the $19.50 area. So we should just place it right around that area, and let's see what is going to be happening. So that is that on the XAGUSD. And for those who actually missed out on this trade yesterday, well, let's see if we are going to be having a third chance. I call it a third chance because the market gave us a first chance here. We had the first chance to join the decline here, which I missed personally, and the market gave us a second chance around here. So let's see if the market is going to give us a second chance for this week. So first of all, let's scale up to the higher time frame. Let's see what's happening on the higher time frame. Let's understand from an holistic perspective what is really going on in this market. Then we come back down here to make a decision. So scaling up into the higher time frame here, so we are right on the daily time frame here. So let me reset this chart so we can have something to look at. So the first thing we observe here is that price has been on a very bearish momentum since the beginning of the year on the silver, and I was able to make a couple of parameters to guide our action for this week. Well, the first scenario I painted here was the bearish trend line here after connecting the series of lower highs here. So we have this major bearish trend line. Though it was broken during the month of February, it came back right under the bearish trend line in the month of April, and price has continued to trade right below that bearish trend line. And what we saw during the course of last week was also quite affirmative as price came back to respect that bearish trend line one more time. So that is the first parameter I was able to identify here. And the second parameter I was able to identify here was this descending channel after connecting the series of lower highs and lower lows. So we have the structure here. Though it was broken around this point, price came back within the channel here, and price has continued to respect that channel since the month of April. So we can see how this channel has been respected multiple times, though we now witness the breakout of that channel during the course of last week's trading session. I'll be going into details of that in a moment, but let me finish with the parameters that I'm going to be using to guide our action going forward. Now, in addition to the two parameters I just showed you, we were able to identify the key level at the $21 level, and we can see how this level has been a major determinant of price action in the past. This level has been a demand niche at one point in the month of May. In the month of June, it was also a buying niche for participants in this market, but as soon as price broke the structure to the downside in the later part of the month of June, price has continued to trend right below that level. So we can see attempts to push price right above that level was met with stiff resistance from the sellers in the month of August, and the same thing happened during the course of last week's trading session as attempt by the buyers to push price up was met with stiff resistance from the sellers. So now that we have all this information synced in, how do we intend to trade the XAGUSD? Well, remember I showed you where price broke out of this descending channel here last week. We had the breakout of this channel. I think a couple of weeks ago we saw the breakout of that channel, and from a technical standpoint, whenever we cite a breakout of structure, what do we expect? Yes, we expect that price is likely going to come back and do a retest of that structure in such a way that we might be having a situation on lower time frame that will be supporting a trend continuation to the upside. So that is the technical standpoint at this point. But because price action rejected the $21 level and the bearish trend line as well, which is synonymous with bearish potential on the XAGUSD, we need to be wary of thinking of buying the XAGUSD. We need to think twice about it. So in order to get things more clearer here, we actually identified a buy zone around here. Remember, we had a buy zone here. That is, we don't know how price is going to relate with the structure that was broken a couple of weeks ago here. So because of this, we have our take profit target within the buy zone, just in order to not be too ambitious here. So we have our take profit target within the buy zone here. We want to see how price is going to relate to the structure at this point. Are we going to be seeing multiple rejection of this area that will be evolving into a reversal pattern that will be pushing price to the upside? We don't know. Or are we going to be seeing a situation where price will break down that resistant level of the descending channel to give us further confirmation that sellers are really very strong at this point? So if a breakdown happens, a retest of structure happens on our lower time frame, then we want to be adding more position to our existing trade. But if price continues to reject our area, then we want to see this area as a retest of the structure that was broken a couple of weeks ago. So now, in order to get a better perspective into my explanation here, we want to scale down to the 4 hours time frame. So on the 4 hours time frame, what we observed at the beginning of the week was this reversal pattern here, which lines up with the key level and the bearish trend line that we identified on the higher time frame. So we can see we had a reversal pattern here, which also lines up with the key level, also lines up with the $21 level, which has been a selling niche for participants in this market in the last 4 months. So we saw this impulsive move here. Price came into this area, evolved into a reversal pattern. We saw the breakdown of the neckline at the $20.30 area, and price has continued to trend to the lower side. So right now, as we head into the New York session today, price is right on the resistance level of the descending channel, which makes it interesting. So what I'll be advising here, if you had not moved your stop loss to lock in your position, please do that right now, because we don't know how price action is going to relate to this resistance point of the structure that was broken a couple of weeks ago. So we want to see what's going to be happening here. Are we going to be having multiple rejection here to push price to the upside? We don't know. Are we going to be having a breakdown of the structure? Are we going to be having a breakdown? Hold on a second, I'm trying to click on my arrow. So are we going to be having a breakdown of the structure in such a way that a retest will be giving us a confirmation to join the decline to the downside? We don't know yet. So we want to move our stop loss to lock in some profit. If you don't want to move it to break even, you can lock in some profit at this point, and let's see how price is going to relate to this level during the New York session today. So let me see what is happening on the lower time frame. Let's see if I can have a structure to play around with as we head into the New York session. Well, I want to scale down to the 15 minutes time frame to see what is really happening here. So on the 15 minutes time frame, what I was able to do here was to identify this bearish trend line here, which I was able to identify after connecting the series of lower highs here. Let me readjust this to line up with this. So one thing I want to do here is to use this trend line as my yardstick going forward. So if price breaks above that bullish that trend line I just identified here, then I want to be opting out of this trade and see if price comes back, break down this level to join the decline to the downside. So you can see price is going to the upside right now, going towards that bearish trend line. So what I want to do is move my stop loss somewhere right above the $19.50, which I told you earlier, and let's see what is going to be happening from this point. So if price at the end of the day breaks out of bearish trend line, then I want to see price come back into the $19.70 area, which is our entry zone yesterday. And if I see multiple rejection of that area one more time, I want to be joining the decline to the downside from this point. So this is how we want to be looking at the XAUUSD for this week, sorry, for today. So if a breakout of the trend line happens, we want to be opting out and then see where price is going to be giving us another opportunity to join the decline here. However, if price comes back into the trend line and respects the trend line in such a way that we start seeing multiple rejection of the trend line, then definitely we want to be looking forward to reversal patterns here to join the decline to the downside. And remember, the multiple rejection of that trend line also lines up with that resistant level of the descending channel we identified on the daily time. Let me show you again. So we have the resistant level of the descending channel here. So this is the descending channel here. So we have the resistant level. Price is around that area. So if price comes right down within the resistant level here, then we want to be sure that our sell position is very valid. So this is how we want to be looking at the XAGUSD for today. So let's see how price action plays out, and if price action continues to move in our direction, we continue to move our take profit target, extend our take profit target outwardly so that we maximize or maximize the profit on this one. So that is that on the XAGUSD. If you have any questions, feel free to drop in your comments or your inquiries in the comment section, and I will be willing to be of help in that regard. I'm already out of time, but I would have to run through the USDJPY quickly so that we can see what we are looking at on the USDJPY. So on the USDJPY, we had a scenario yesterday where price has been. Where were we yesterday? Hold on a second. We were around here yesterday. Hold on a second. Okay, so we were around the 145.500 area here yesterday. And one thing we observed since the beginning of the week was that price action has been caught up within a channel, had a 145.650 and a 145.300. So we saw this scenario since the beginning of the week. Price has been caught within this channel. And one thing I said yesterday is that if price breaks out of this channel in either way, we want to be joining that momentum. So if we have a breakdown of the structure in such a way that price breaks down that temporary bullish trend line we identified, a retest of structure will be giving us a confirmation to join the decline to the downside. But that did not happen, as we saw a breakout of the 145.650 level. In fact, we saw multiple rejection of this level, and personally I joined the rally to the upside. But one thing happened here. Price came back right down, and we can see that the buyers are really struggling with the USDJPY here. And for me personally, it says a lot about the intervention of the Bank of Japan a couple of weeks ago. The ripple of that intervention is still lingering in this market, as buyers are really finding it very difficult to push price to the upside at this area. As we can see, multiple rejection of the 145.900 area by the sellers to push price to the downside. So at this point, it's likely that we might be getting stopped out on the USDJPY. I don't know yet. So my stop loss was around 145.300 before. I had to move it closer to the 145.455, as I never can tell if price breaks down that bullish trend line, then definitely this might turn out to be a bearish signal at this point. So in that regard, I had to move my stop loss accordingly. I've already given up on this buy position already, thinking that I might actually get stopped out on this one. But I'm going into the New York session today. How do we intend to trade this? But before I go into the details, I want to emphasize the fact that price is still within a very strong supply zone that we identified on the daily time frame on the USDJPY. Let me show you what I mean by that. So we will have to scale up to the daily time frame, I think, and then let's look at what has been happening since the beginning of the month of September. So as you can see here, since the beginning of the month of September, we can see that price, every attempt by the buyers to push price right above the 145 area has been met with stiff resistance. Hereby, price action has been caught within a consolidation phase since the later part of the month of September. As we see, every attempt by buyers to push price right above that supply zone has been met with very strong stiff resistance. However, if we look at what has been happening since the later part of last week's trading session, we can see that there has been bullish momentum within this channel, and it led into somewhat a breakout of that 145.500 area during the later part of last week's trading session. Let's scale down to the 4 hours time frame so that we can see things more clearly. So on the 4 hours time frame, we can see the channel here. We can see, so I had to identify this temporary bearish trend line in the meantime, as this is the trend line within that channel. So price has continued to tend towards the resistant level of this channel, giving us a clue that buyers are really trying to push price to the upside. Though we had the breakout of the 145.500 level, but the selling pressure here is still very strong, and the selling pressure might likely break down that bullish trend line. So if it breaks down that bullish trend line, then definitely we want to see that supply zone as still a very strong point for participants in this market. And if a breakdown of that level happens, remember, we are not getting too excited. We want to wait for further confirmation in the form of a retest of either the trend line here or the structure around here. Then we want to be joining right below that level, or probably wait for price to come right below the 145.500 area to be selling the USDJPY going forward. And if we are selling right below the 145.500 area, where will our take profit target be? Well, our take profit target will be at the support level, which are the 144 area in the meantime, because we don't know what is going to happen around that area, as we want to see how price action is going to relate to this level. And if we have a breakdown of that 14400 level, a retest will be giving us further confirmation to add more position to our existing trade. So I would advise us to be on standby to be able to take advantage of this move when it finally happens today. So that is my scenario here on the USDJPY. So let's see how this goes as we head into the New York session. So on this note, I would like to call it a day, but before I do, for the sake of those who are not part of the sessions, who are not part of the first part of the beginning of the session, let me quickly run through what we went through today so that you can have a purview of what our expectations are for today. So the first pair we looked at today was the US oil, and we are in a very strong profitable situation on the US oil, and the thing I told you was that you should move your stop loss to break even. Or no, sorry, your stop loss is somewhere above the $90.50 area so that you can lock in your position against any sudden pullback that is likely going to be happening here. So we finally saw the breakdown of the $91.50 area, which signaled that bearish move that we enjoyed since in the last 24 hours. Now, going into the New York session today, we have a parameter that we want to be using to guide our action. So we were able to identify the $90.50 level around here, which is the breakdown of that channel. So I said if price comes back into the structure and we start seeing multiple rejection or reversal pattern around this area, we want to be joining the decline to the downside. So if you are still in this trade, you want to add more position to this trade, and if you are not in this trade yet, then that is probably the second chance the market is giving us to join the decline to the downside. Then I also have this parameter, this trend line as well. If we see multiple rejection of that level, we want to be joining the decline around this area as well. So take profit targets still remain around the $86 level, as we want to see how price action is going to relate to this level, though we are on a very strong bullish momentum on the US oil, remember, and this bearish momentum we've been witnessing since the beginning of the week is more or less going to be a retracement of that impulsive move. So we don't know where the buy continuation is going to happen. So in that regard, we want to be holding on to the $86 level as our TP level, and in the meantime, let's see how price action relates to the structure before we want to be adding more position to our sell position, or we want to be getting ready to buy the US oil. Then we went on to talk about the US tech, where we are also in a very good position on the US tech. We had a channel identified around the $11,050 level and the $10,950 level, and we saw the signal, the bearish signal yesterday. We saw the breakdown of structure, retest of structure, and we joined the decline to the downside. And currently price action is been on the $10,850 level. As you can see, we can see buying pressure coming in from this area in the last 18 hours here. So we want to be mindful of how price action is going to relate to the structure in the next couple of hours. So in that regard, we have moved our stop loss to protect our position against any sudden pullback that is likely going to happen here. So one thing I said here is we want to see how price action is going to relate to the 10,850 level. If we are going to see a breakdown of the structure, that is an engulfing candle taking us right out of the structure, taking all the buy position that we've been witnessing here since yesterday, then we want to be seeing this as a bearish signal, and then we want to be patient to wait for price action to do a retest of structure before we join the decline to the downside. So if you are still in this trade, that will be an opportunity to add one more position to the trade, and if you are not, then we want to be joining that decline, as the market has given us a second chance. Now that is the first scenario we are looking forward to. And one thing I said as my second scenario is this: considering the fact that price is still within the strong demand zone we identified on the higher time frame, that there is a possibility that we could be having bullish momentum from this area. And what did I say here? I said if there is going to be a bullish momentum here, then we want to look at how price is going to relate to this $10,850 level. That is, if we see a consolidation phase here, what we want to do is to identify the resistance point of that consolidation phase. So I'm just giving you a simulation of what that might look like. So if we have a consolidation phase like this, then we want to look forward to a breakout of that resistance level, retest of that structure, then we want to be joining the rally to the upside. So this is what we want to be looking forward to before we buy from this area. So let's see how price action plays out in the next 24 hours, and we shall be here tomorrow to do a follow-up video or follow-up detail to this. Now we moved on to the XAUUSD, and we are in about let's see how many pips in profit. We are in about 1,500 pips in profit at this point in time, after missing out on this huge move that started the week. The week started with about we missed about 1,700 pips here, and price continued to rally to the downside. So the first thing I told you to do here was to move your stop loss to break even, or move your stop loss to somewhere right above the $1,675 level to protect your position. At least if price suddenly moves up, you will still be in a profitable position. And one thing we observe here is that the $1,661.50 area has been rejected in the last 10 hours here. So this gives us a clue that there are buying potential opportunity around that area. So we want to be mindful of that, and in that regard we are moving our stop loss to break even or lock in some profit. So now that we have done that, we want to see what is going to be happening. Are we going to be having a bullish momentum in such a way that price comes back into the strong key level we identified at the $1,680 level, where we want to be looking forward to reversal pattern around here to push price to the downside? That is one scenario we are looking forward to. Or are we going to be having a situation where price breaks above the $1,680 level, right back into the bearish trend line we identified on the daily time frame, or the neckline here of the reversal pattern to join the decline to the downside? So these are the two scenarios we are looking forward to for selling opportunity. However, if price breaks down the $1,661 area, that is, we have this move taking out all the buy position around this area, then we want to see this as a bearish continuation signal. And if that happens, remember, we are going to be patient to wait for price to come back, do a retest of structure before we join the rally, the decline to the downside. So if you are in this trade, that will be an opportunity to add one more position to your trade. And if you are not in this trade yet, then that's an opportunity to join the third phase of that bearish momentum here. So this is what we are looking forward to on the XAUUSD. Then we went on to talk about the GBPUSD as well, where we already have a sell position running, and we have a situation where price broke down the 1.10500 level during the New York session yesterday. We saw the breakdown, retest of structure, price moved about 70 pips thereabout before it came back to our entry zone. And I said if you had move your stop loss to your entry zone as of yesterday, you must have been taken out at this point in the market. But if you are not taken out, then remember, our stop loss is right above the 1.11100 level, and if price takes us out of that position, it's okay. We are still going to have another opportunity to take advantage of. So at this point, if you are not in this trade, I have advised that below the 1.10500 area, anywhere below the 1.10500 area looks very reasonable to be joining the decline to the downside here. Now, the second scenario I cited here is that if at any point in time we get stopped out in such a way that price breaks out of the 1.11100 level, that is, we have a bullish signal breaking out of that structure, then we want to be seeing this as a bullish signal, which is likely going to be a retracement move of the previous impulse leg. So what we want to be doing here is, if you are a counter trend trader, a retest of structure will be giving you an opportunity to join the rally to this area. That is, if you are a counter trend trader. But if you are not, you want to be patient enough to wait for price to continue right into the sell window we've identified here, where we want to be looking for selling opportunities to join the decline to the downside. So why do we have a sell window here? Let's scale up to the 4 hours time frame so that I can show you that quickly, so that we can see what I'm talking about. So we have the scenario here. We had the breakdown of the 1.14 a couple of weeks ago around here. price came back to do a retest of that structure during the course of last week's trading session, giving us a clue into the strength of the sellers at this point. So we have this impulsive move since last week, and if we have that breakout I showed you on the 1 hour time frame, this is likely going to be a move right into our golden zone area, which is right between the 50 and the 70.6% of the previous impulse leg, and which also lines up with a higher low, that is price does not break above the 1.1400 level and we start seeing a reversal pattern here. We want to join the decline to the downside with the take profit target within the neckline area, which falls right within the buy zone we identified here. So that is that on the GBPUSD. Then we went on to talk about the XAGUSD, which is the silver, which we are already in profit on the silver as well. And one thing I said here is that since price is right on the resistant level of the descending channel that was broken a couple of weeks ago, let me show you that on the 4 hours time frame. We want to see how price is going to relate to that level. So what this simply means is that we want to be patient. Remember, we saw the breakout of that level in the month a couple of weeks ago. That's the descending channel we identified here. So we saw the breakout of that descending channel. So we said, let's see how price is going to relate with the structure. Are we going to be having a situation where price does a retest of that structure in such a way that we start seeing reversal pattern? We start seeing reversal patterns here. Then we want to be joining the rally to the upside, or if we are going to be seeing a breakdown of that structure, a retest will be giving us confirmation to join the decline to the downside on the XAGUSD. So we are still in profit on the XAGUSD, and I've told you to move your stop loss to lock in some profit here just in case anything of such to the upside happens. And in addition to the current structure we have here, I was able to identify this bearish trend line here, which price has been respecting since the beginning of the week. We have been seeing price respect that trend line. So let's see if it's going to respect it one more time, and if it does, we want to be joining the decline at the retest of that structure. And if it breaks out of that structure, then definitely we want to be getting out of this trade, waiting for price to come back into the $19.70 area, where we want to be looking out for selling opportunities to join the decline if that is going to be the case. So now the last pair we talked about today is the USDJPY. I need to drink some water. So on the USDJPY, the first thing I told you here was that we had a channel between the 145.300 level and the 145.650 level, which price has been consolidating within before we cited the breakout of that structure yesterday. And with the breakout retest of the structure, we joined this bullish move. And right now, though we are in a loss position as price continued to oscillate right below the 145.650 area. So we are still looking forward to this bullish momentum as price is. But if price breaks down the 145.6, breaks down the bullish trend line here, and probably breaks down the 145.300 level, then a retest of structure will be giving us confirmation to join the decline. So that means we will be taking out of our buy position, and then we get ready to join the sell momentum. So this is how we intend to trade the USDJPY. So we are still in this. I told you I'm of the opinion that we might be stopped out on this trade. We don't know yet, because we can see that every attempt by the buyers to push price right above has been met with strong selling pressure here. So it still shows us that the sellers are still very strong in this market. And remember, we are within a very strong supply zone, which has been holding price action for over a month now. So we saw right above the 145 areas being a very strong selling niche for participants in this market, as all attempt by the buyers to push price right above that level has been met with very strong resistance from the sellers. So the selling momentum will be valid if we cite a breakdown of that bullish trend line that I was able to identify here. So if we see a breakdown retest of structure, we want to be joining the decline to the downside with a take profit target sitting right around the 144 area in the meantime, after which if we cite a breakdown of that structure, then we want to be adding more position to our existing trade. So that is that on the USDJPY. I hope I made a lot of sense today, and I wish you be on standby to take advantage of any potential opportunity that I have simulated for you. So I've tried as much as possible to simulate all possible scenarios that is likely going to be happening on all the pairs that we deliberated on today. So the only thing I'll be saying is try to be on standby, wait for those opportunities to come in, breakout retest of structure. Remember, don't get too excited when we cite the breakout of structure. We want to wait for price action to give us that confirmation, which is likely going to come in the form of a retest of the structure before we want to be joining either the rally or the decline at that particular point in time. And if price does not give us the retest of structure, that is, price does not give us that confirmation, please pass the trade. There are quite a lot of opportunities in the financial markets that we could actually take advantage of. So on this note, I want to wish you best of luck during the New York session today, and I look forward to seeing you tomorrow, same time, 10 a.m. UTC, 11 a.m. West African time, Extreme Speed Live, and let's come again together to plan against the New York session tomorrow. So on this note, I wish you best of luck. Okay, all right, bye bye.